Everyone wants a Swiss bank account, but almost everyone believes the wrong things about it. They think you need $5 million deposit. They think you must fly to Zurich. They think Swiss banking is dead. Or they think it's impossible unless you're already ultra rich. Most of that is simply not true. I'm Matteo Maglia, Partnership Manager at GloboBanks, the banking introduction company for international accounts. And today I'm going to explain how opening a Swiss bank account in a top-tier institution actually works in 2026. Not fantasy, not YouTube myths, not travel there and see what happens. Real structure. Let's start with the first misconception. My Swiss bank account must be secret. No. Swiss secrecy, as it existed 20 years ago, is gone, but safety and secrecy are two different things. Privacy is not anonymity. Switzerland still offers political neutrality, strong legal protection of property, conservative banking culture, high capitalization requirements, stable regulatory framework, deep correspondent banking network. That's why global institutions, funds, family offices and wealthy individuals still bank there. Now, misconception number 2. You need millions. This depends entirely on the bank category. Switzerland has different layers of institutions. Retail banks, cantonal banks, private banks, premium wealth management institutions, boutique assets managers with banking licenses. If you walk into a top ultra-private bank alone without introduction, yes, you might hear numbers like 2 million, 5 million, something even 10 million minimum, but that is not the entire market. Many high-quality Swiss institutions today are strategically repositioning themselves, also thank you to partnership with banking introducers like GloboBanks. They are competing globally. They want international clients. They want entrepreneurs. They want structured individuals. And depending on profile, deposits can start much lower than most people imagine. Sometimes 250,000, sometimes 500,000, sometimes even structured solutions are around that range. But here's the key. Deposit size alone does not determine acceptance. Profile does. Source of funds clarity, business logic, long-term relationship potential, investment interest, jurisdictional exposure, compliance risk. Swiss banks do not need your money. They want the right client. That is a very big difference. Now, misconception number 3. You must travel physically. 10 years ago, almost always yes. Today, it depends if you are well introduced or not. Some institutions still require in-person meetings, especially for very high net worth clients. But many banks today work with, for example, GloboBanks that allow remote onboarding via video identification, certified documentation, structured compliance interviews, digital signature frameworks. However, and this is critical, remote does not mean easy. It does not mean fill the form and get approved. Swiss banking applications are very complex. They require the detailed KYC, clear source of wealth documentation, business model explanation, tax residency transparency, sometimes notarized and apostilled documents. If you submit incomplete or poorly structured documentation, you don't just get rejected, you get flagged. And Swiss institutions do not like repeated failed application. This is why people who try alone often get frustrated. They think it's about deposit size, but it's not. It's about positioning. Now, let's talk about what makes a Swiss bank top tier. It's not about marketing, it's not about fundamentals, capital ratios, liquidity strength, low exposure to risk domestic lending, strong international footprint, long operational history, conservative asset allocation philosophy, transparent audited financials. Some Swiss private banks have existed since the 17th. That matters because they have like more than 300 years of history. And when you choose correctly, you are choosing jurisdictional strength, institutional resilience, reputation, correspondent network stability, multi-currency flexibility, access to global markets for your investments. Now, let's address something very important. If your only goal is to park money and hide it, Switzerland is not really for you. Swiss banks are extremely compliant. They respect CRS, they respect international reporting, they respect regulatory frameworks. But what they offer is stability, professionalism, institutional seriousness, high-level relationship management, and global diversification. Now, let's talk structure. In most serious cases, sophisticated clients separate operational banking, reserve capital, investment portfolios. Your daily business cash should not necessarily sit in your long-term wealth institutions. Swiss banks are often ideal for reserve of capital, investment mandates, long-term wealth preservation, and multi-currency diversification, not for running daily small transactional activity. Understanding this difference is the key. Now, what are realistic expectations in 2026? Opening timeline? Well, thank you to our introduction, is from 2 to 6 weeks on average. Remote possible? Yes, 100%. Deposit expectation? Up to 90% lower than mid suggest, but still serious. Swiss banks are not for 20k deposits. They are for structured individuals who understand wealth management. And the fees? There may be custody fees, portfolio management fees, transaction fees, but when structured correctly, those costs are strategic, not wasteful. And in many cases, thank you to our introduction, are very low or there are no costs. Now, the most important point, Swiss banks do not advertise file application here. They operate through relationships, through introductions, through internal approvals. And if you try to force entry without understanding how the bank thinks, you will likely fail. And once rejected, reopening discussion becomes significantly harder. This is why serious international clients approach Switzerland strategically, not emotionally, not impulsively, but with documentation prepared, profit structured, positioning clear, expectation aligned. Switzerland 2026 is not about secrecy. It is about quality. It is about jurisdictional strength. It is about resilience. And it is about understanding that the world is becoming more volatile. When volatility increases, conservative banking cultures matters. And very few jurisdictions in the world combine political neutrality, financial expertise, multi-currency sophistication, strong legal property protection, and global reputation. Switzerland remains one of them. The question is not, can I open a Swiss account? The question is, am I structured correctly to open the right Swiss bank account? There is a very big difference. If you approach it properly, with the right positioning, realistic expectation, and strategic documentation, opening a Swiss banking relationship remotely in 2026 is absolutely possible, but only if you treat it seriously, because Swiss banking is not about hype, it is about structure, and structure always wins in the long term. And if you want to have more information to understand how you could open your bank account in Switzerland 100% remotely, you will find a link down below. You can refill out the form and one of our managers will reach you out to understand your situation, your needs, understand if your profile can fit for a Swiss bank, and after that know if we can for sure introduce you in the proper and the right bank. See you in the next video.